Beasley Media Group.
There is no middle ground in today's housing market.
We started seeing a climb.
Sales of existing homes rose sharply.
So the homes that have been selling are at a higher price.
Let's begin.
All right, in 3, 2, 1.
It's time to cut through the clutter.
Refinancing your home loan.
This is your source for the latest real estate and home financing news. You can actually use.
My prediction is that most predictions will be wrong.
It's the Market Snapshot.
Going live.
And now, here's your host, Dan French.
And welcome to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to mortgage specialist here in Las Vegas on this beautiful Sunday. Man, yesterday was great, wasn't it?
Yes, it was.
Man, I was outside and I was looking at, wow, this is great to be alive. You got nice weather, not a cloud in the sky. It's starting to get a little hot, but you know what? I can deal with it. You know, I think when it gets hot, I'll find my spot where I'm going to be staying cool.
Hey, how come your voice is a little bit off today?
Oh, it's, you know, under the weather. A little bit under the weather. So going right into this, will we raise rates coming in June? And what's going on is now that the non-farm payroll and employment came out a little bit better than expected yesterday. Instead of the economy showing signs of strength, could we be showing signs of weakness? The bounced Chicago National Fed Activities Index was minus 0.29 instead of the plus 0.25 they expected. And the bounce in January showed promise, but still an overall big disappointment. This is one of the worst they had in 2 years. Personal income and spending in February was supposed to be up 0.1%, and we actually got this, but it was revised. So what they were looking at is that, well, you know, we're increasing. 5.5 is what they really wanted. You know, they say they hit that, but when it was revised, it was 0.1 in February.
Oops, I made a mistake.
Yep, so they made a mistake there. And then the GDP rose only 0.6%. That's very low. That's not really good. Existing home sales, 7.1 in the drop year over year. This is the biggest drop, which happened third consecutive month now.
And this is new home sales, correct?
That's correct. And no, this is existing home sales.
Existing home sales.
Yep. Is it because home prices are too high? What do you think?
You know what? It really depends. If we're looking at the market as a whole, then yes. Now, if we're just looking at Vegas, I think the market is doing well. And I do have the statistics on that, and it's looking good.
I'm sure you're going to give us to us, right?
I always give it to you.
Is there a lack of inventory because there's no buyers at these prices? You know, we talked about prices and how it's making or having people being bought out of this market. We see a little bit out here in Vegas. Is that really happening across the nation? You know, I know Vegas is kind of going through that. I talked to you in previous shows that we needed 3-4 buyers to get into one property in some cases. And again, is that always? No, but it does say that the purchasing power of a consumer is going down. Also, sellers might even be wanting to look at high prices. So if you're a seller of a property, guess what? You might be trying to get your highest return on your investment that you can get. And then if you look at it, they have to drop in a lot of cases their offers because of the appraisal.
That's correct.
So in reality, can we afford to increase interest rates? Well, I think lack of viable jobs and low down payments are still showing signs of regression. But I can tell you this, I could tell you that the Fed has put April for their meeting back on cue here for a possibility of rate hike in June. I don't think that's going to happen. What do you think?
I don't think so either.
The Fed growth was projected at 3% this first quarter. And that does show some strength, but it's still weaker than expected. Matter of fact, this first quarter was, when you had the interest rates that was increased at the end of 2015, this really did show some of the weakest signs really in the last 5 years. They've even stemmed some of it back to the Depression.
Yep.
And it's just because we started off so slow and so stagnant. A lot of the big stocks and things that we're supposed to profit from, you know, a good economic activity, if you want to call it, from our economy, they've actually taken a loss. You know, a lot of the money, the dollar right now is not doing as well. And a lot of the money for investors is if you invested in overseas. You know, if you invested overseas, the weakened dollar has making that better for if you're an investor out there. If you took money and say you invested it into China or somewhere else, these are a little bit better opportunities for you, and we've seen strength in there. And matter of fact, it's been one of the highest profits some of these stockholders and investors have seen by investing in overseas.
So basically, your dollar is dropping in value.
Yep. Janet Yellen last week said the Fed now believes that all economic growth, the rate of interest is lower than it was in December, meaning they have a growth number and it's still lower than what they expected, but they still didn't come out and say, yeah, well, we really committed to raising interest rates. We just assumed we would try to do it 4 times this year.
Yeah.
Now it's dwindled down to 2. And she's still saying, yeah, there's economic growth, but that still doesn't indicate they're going to raise rates, because if they were, they would have already done it.
Correct.
So she could be wrong. You know, Fed assumption on labor productivity, giving us a weak labor, has had some effect. You know, why would we have big optimism that this is going to improve? And why would we not think that the labor productivity is going to just stay the same? Because we don't see any signs that labor productivity is actually going up, correct?
Correct.
So the reality of all these problems are with taxes, business restrictions, the Fed has put, really from the Dodd-Frank Act, the Obamacare, there's a lot of programs and things out there that's really affecting
our economy
and labor productivity. And I think that's a big thing, because you have to really look at, if you're going to take and employ your business here, what is going to affect you? And all those things will affect you.
Healthcare. If you're a small business, which is the majority of our economy is small businesses, and they don't want to pay that because they can't afford it.
Absolutely.
It's a trickling effect.
And, you know, we talked about the amount of jobs that's being put in now.
Part-time.
A lot of it's part-time. A lot of the high-paying jobs are gone, or the good-paying jobs, the 40-hour-a-week jobs. Now they're talking about, well, in California, they're going to raise the minimum wage to $15 an hour. And what is that? What's the outcome of that? Well, let's take a look at this, okay? I know you got your take on this. So you look at this and you say, well, what is it going to cost us as a business to have a $15 an hour laborer?
Correct.
Well, you got $5. Let's say you're making $15 an hour and you have to make the extra $5 for taxes and maybe insurance and things like that to provide to the employee. Well, guess what? That $15 an hour, they're talking about replacing it. If they don't do this, they're talking about replacing that $15 an hour worker with a computer or with a robot.
You just took it right out of my mouth.
Explain to me what that's about.
So basically, and this is what I'm seeing a lot now, McDonald's is utilizing this, where a lot of people want more money. So what they're doing is they're just, hey, you know what? All these employees, we're cutting you guys off, and we're bringing in these machines where you can literally order from the machines.
Right.
And you have less workers, and it's more cost effective. So basically, the government is squeezing smaller businesses, and what happens is the business will start squeezing the consumers and also the employees as well.
Right.
It's a trickle effect. Now, imagine this. You're paying $1 at McDonald's for a burger, whatever it is. Do you think that burger is going to be $1? No, they're going to raise it.
Well,
so that's not the problem here.
Here's the thing, though. You got to look at, if they do that, how many jobs are going to go away. The other thing is that if you replace them, you know that people obviously get sick.
Yeah.
They have to have they have vacations. They have to have insurance. There's things that come in where robots, they don't have to have that. So it's going to really come down to, or some type of computer, is it cost effective more to have a computer? If it costs you $13 an hour to have a computer and your employee costs you $16 or $15 an hour, they're going to go with the computer, and all these people are going to be out of jobs.
This is what I don't understand. People are complaining about, I want to raise. Well, first of all, why don't you go out into the economy and make more money and stop having that mindset of working at McDonald's for $8.25 an hour?
Well, we talked about this, too. You got a lot of people that go to college. They get this high degree, and then they get out of college. And
but they don't even use that degree.
They don't use it, and that's a waste of resources, really. Yeah. You know, we're going to talk about student loans, and we're going to talk about putting yourself in a position there. You know, it's just there's a lot of things that go on if you're out there and you're thinking, well, I'm just going to go get an entry-level position, and I'm not going to be affected even if I have a degree. Well, guess what? You might be affected now, even if you got a 4-year or 6
you got to make those payments.
Well, you might be replaced.
Yeah.
You know, those robots and these. So you're looking at the idea that what's going to happen to our economy if these jobs start going away? Is this going to have a trickle effect, not just from California, but across the nation. I don't think it will. I think this is setting them up for a problem where they can't recover from, and then everybody out there is going to see California as being the example of what not to do, and putting a $15 minimum wage out there. You can't go, and it's just too extreme at this point, I think, to just go from where they're at now to $15 an hour. And then when you have all these employees that are now looking for jobs, where are they going to go?
That's right.
Guess where they're going to go? Unemployment. Mm-hmm. And now you're going to have a problem with unemployment.
And right now, unemployment, we're at, what, like 50 million people right now that's on food stamps and taking advantage of the system?
The unemployment, I know, and the unemployment here is not so much, well, you got a full-time job. Unemployment, you got a job that you're working 20 hours a week, but you're only making, how much you making on a 20? You can't live, in my opinion, unless you got one of those premium jobs that you're a pit boss or something.
Yeah. And we talked about this. All these part-time jobs count about 80% of the job growth.
That's it.
That's a lot.
That's a lot.
And the service sector is hospitality. You got the bartenders and stuff like that. Come on, man. This ain't like real jobs. I mean, it's phony.
Well, I just want to tell everybody out there, thank you for tuning into the Market Snapshot. And, we always put this show together because we're trying to educate the Las Vegas community. We're providing the latest information on financing and real estate, and we really pride ourselves on that, right, Chuck?
That's correct.
As always, you can reach us outside studio if you want a consultation. 702-216-3907 is my direct line. You can call me there. Also, you can go to my website, danfrenchloans.com. I want you to go check that out. That has previous shows. We got a lot of good information from there. We have educational videos, things like that. Also, if you want to get a hold of us, maybe through Facebook, we have a 781 Nova through Facebook. You could tweet us at 781 Nova. And we also have a lot of good information that we can, you can stream us live right now on Facebook. Also, we're on Twitter. Through Periscope. So if you want to do that, we're
on everything.
We have a lot of viewers. We have a lot of viewers going out and listening to us and watching us live. I'm a little under the weather, so when you tune in, you might have to take a double look. Man, he looks pretty white.
Yeah, I know. Look at them bags on his eyes.
Let's go right into the market rundown. You ready for this?
I'm always ready. All
right.
So, honey, what are you going to rant about today? Can we get a little preview?
It's the market rundown.
And as always, we're starting off with financing news and events. I'm going right into housing market statistics, interest rate trending, where the rates ended up this week. We're going to talk about student loan debt. We're also going to talk about home buyer consumer confidence. And that's about it. We're going to wrap that up. Again, if you want to call us outside studio, you could also reach us at 702-781-6682. That's 781-NOVA. That is to schedule a free consultation. You can, like I said, you can stream live by going to KDWN News Talk Radio, KDWN.com, and you can download the app, KDWN application for your phone.
Yeah.
You have that, right, Chuck?
That's right.
All right. So let's go right into news and events. You got any news and events?
Hey, you know that T-Mobile stadium?
Yep.
Apparently, they're going through the rehearsal process right now. They're getting everything all finalized. And I was reading in the paper about MGM where people are actually ranting about paying from $5 to $10 to park at the MGM.
Yeah.
But at the end of the day, I really think it's worth it. If you're going to go out to the arena, I mean, I think you should pay, for parking. But what sucks is if you're just going out to gamble while there's an event going on and then you got to pay for it, then I think there's got to be a problem there. Yeah. What do you think about that?
Well, I think they need to stay away from parking, trying to charge you to park. Because
really?
Because I think that one of the attractions coming here, they already know you're going to leave with paying your, losing your mortgage payment.
So you're getting raped every way around.
Yeah. So I was like,
no lubrication.
When you show up, just go ahead and start giving money.
Yeah.
When you enter the casino, start giving money. When you're going to get those shows, start getting drinks. Everything adds up. And all they're doing is cha-ching, and they're just raking in that money.
So basically, when you're leaving, your butt's sore.
Chuck, what do you do on your spare time? Let's go into news and events. What do you got, man? So anything else?
News and events. There's actually an event that's coming in and taking place. It's called the Extreme Thing, which is actually today. It's in Nevada's largest attraction, sports and music festival.
Yeah.
Okay, and that's something to check out. It starts at 10 a.m. today. And that's basically what I got. What you got going on?
Oh, wow. That was a lot.
Yeah, that was.
The Killers with Wayne Newton and Shamir at T-Mobile Arena. We just talked about the T-Mobile.
Yep.
Get in there and get your parking. Start paying for it. And get started with that. Adair Miller will be performing at the Venetian. And I know,
Miller.
Yeah. I just want to throw that out there because if you're one of those Adair Miller fans, well, we're thinking about you. We got a good fist pump here from us. So. Let me say something about that. All right. So she's performing tomorrow, and there's a championship for the college basketball tomorrow. Mm-hmm. So, man, I would push my day out. I'd be like, give me Tuesday. I don't want to do Monday. Also, Star Trek: The Ultimate Voyage. Also going on at the Orleans today.
We should go.
Yeah. You got your Spock mask, don't you?
No, I got the ears. The point ears.
I like that Star Trek. You know, Star Wars and Star Trek are like one of those things where you can't get enough of it, right?
Yeah.
Yeah. So,
I don't know. It's that nonfiction that I can't.
Man, you got to have an imagination.
Yeah.
Yeah, you got to have an imagination. ACM All-Star Jam at MGM today.
Woo! Bro, this is good country music right here, man.
Oh, yeah. That's what I'm talking about. Hey, I was going down the strip on Friday.
Yeah.
And I seen a lot of people with cowboy boots and hats and things walking down the strip. And I was looking over like, oh, I didn't bring my boots or else I'd have showed up.
That's messed up, man. Because you know why? Friday night you were like, hey, let's go hang out. I give you a call. You don't answer the phone, and you're here telling me that you went to the strip.
Oh, yeah. I forgot about that.
Wow, that's messed up, bro. I just caught you lying. You've been ducking me.
Let's jump over to financing news. Small banks often try to become big banks, and many opt to acquire or merge rather than grow their assets organically. If there's a cultural fit, then they'll do this. But there's some things that is quieting down. The S&P Global Market Intelligence reports as of March 15th, there was 47 bank and thrift transactions versus 85 in the quarter four of 2015 and 67 in quarter one, or about 45% and 30% lower respectively. So looks like that the smaller banks or the bigger banks are taking less risk and not trying to monopolize and take over smaller banks. Seems like that's happening less and less.
I thought it was happening a lot lately.
It was, but then they slowed down over the last couple of months.
Gotcha.
From what this information is telling us. Also, regulators are not big fans for entities that can be regulated. So peer-to-peer lending is on the rise. Basically, it's online lending is what this is. Mm-hmm. And they're lending to individuals, and they can't be they really can't be governed the same way as other lending institutions.
Really?
Yeah, so now they're tracking this down, and they're really making this where it's not so popular. You know, even in China's marketplace is booming. So China was one of them that is cracking down as well, where you have a lot of lending institutions going online to try to, for me, if you're looking at it, why would you go get a loan that's this significant? One thing is this. I don't know. I understand there's millennials out there that they just want to contact you when they need you. Yeah. They're going to go out there and do all the work themselves. But at the same time, you have to realize that if you have a person that can give you that information, at the time of when you call them and you don't have any speculation, you don't have any concern, one, there's service there. I don't know. I'm from that era. I'm sure you are too. But the other thing is I don't know. I kind of question how this lending institution online is really going and how it's effective.
And also what I realize is most of them seems like to be a refinance more than getting you into a home.
They are, and I've gotten a lot of problems with these people that are online. So anyways, it's Dan French with the Market Snapshot. We'll be right back. We have a whole lot of show left. We're going to talk more about student loan debt. We're also going to talk about interest rate trending. We have a lot to talk about. We'll be right back.
You're listening to the Market Snapshot with Dan French from Nova Home Loans. Got a question about home financing or real estate? Call Dan now, 702-257-KDWN.
AP Update. I'm Ed Donahue. An Amtrak train that left Philadelphia headed south hit a backhoe on the tracks and derailed. 2 people outside the train were killed. New York Senator Charles Schumer says the 2 killed were the backhoe operator and a supervisor.
Sometimes there's human error, sometimes things happen, but there is virtually no excuse for a backhoe to be on an active track. No excuse. So Amtrak has to examine its processes from top to bottom.
More than 30 people on the train were injured. Ari Neumann was one of the passengers.
It was harrowing. It's not something you usually expect to see on routine train ride.
The train was carrying more than 300 passengers and 7 crew members and was heading from New York to Savannah, Georgia. Service on the Northeast Corridor was suspended between Wilmington and Philadelphia, but service to New York remains operational. The NTSB will be investigating. AP Update, I'm Ed Donahue.
And we hope you're enjoying this beautiful Sunday morning. We thank you for making KDWN a part of your day. Looking at the forecast for the rest of the day, sunny skies should top out temperature-wise somewhere in the middle 80s. Looks like a similar forecast for the rest of the week as well, with a possible shower rolling into the valley by Friday. Right now it's sunshine and 75, and stick around for more real estate and home financing news. The Market Snapshot continues next here on News Talk 720 KDWN.
Purchasing your first home or refinancing your current home are both major financial decisions that necessitate having the right person on your side. Hi, I'm Dan French with Nova Home Loans, and I'll put my 9 years experience to work for you to make the loan process as easy as possible. Call me today, Dan French, at 702-216-3907.
And for real estate and home financing news you can use, catch the Market Snapshot every Sunday from 11 a.m. till 1 p.m. on News Talk 720 KDWN.
The Nevada congressional delegation shares the latest from Capitol Hill on the Eye on Washington with Marilee Joy Show, Sunday mornings at 7:30, here on News Talk 720 KDON.
It's the $1,000 Word of the Day giveaway. Every weekday, News Talk 720 KDWN is giving you the chance to be the nationwide winner of $1,000. Every weekday morning at 7:15, Dave and Chad will tell you what time the Word of the Day will be revealed. Make sure your radio is on News Talk 720 KDWN at that winning time. When you're given the $1,000 Word of the Day, you'll have 15 minutes to enter that word using the KDWN app on your smartphone or tablet. Or you can enter online in the KDWN Listener Live Player at KDWN.com. If you're the randomly selected nationwide winner, $1,000 is yours.
Kick ass.
Plus, everyone who enters the $1,000 Word of the Day contest will be entered into a random drawing for our grand prize, $10,000. Win or lose the daily contest, you could still win 10 grand.
10 grand.
The $1,000 Word of the Day giveaway. Go to KDWN.com for contest details and rules.
Your news, traffic, and weather from AM 720 KDWN is now available on iHeartRadio.
Download the free iHeartRadio app from your app store to hear KDON on your smartphone or tablet.
Over the past year, One Nevada has saved locals over $4 million in auto loan interest. If you have a high-rate auto loan, we may be able to lower your payment or shorten your term. We're the cure for the common auto loan. Apply online today or find a local branch at onenevada.org.
One Nevada Credit Union. Our one focus is you.
One Nevada is open to all Clark County residents. Federally insured by the NCUA, Equal Opportunity Lender.
Save the date, Wednesday, April 27th for the Denim Day Fashion Show and Luncheon at the Fashion Show Las Vegas, benefiting the Rape Crisis Center. Denim Day gives everyone a chance to raise awareness and stand with survivors to assure them that they are not alone. It's also a chance to support the Rape Crisis Center's services and programs that reach tens of thousands of individuals in the community each year. Wednesday, April 27th at Fashion Show Las Vegas, it's Denim Day Fashion Show. For more information, go to rcclv.org.
You're listening to the Market Snapshot with Dan French from Nova Home Loans.
Welcome back to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to mortgage specialist here in Las Vegas. I'm here with Chakits Krulsawat from Simply Vegas.
Yeah.
Chakits, what's happening this Sunday?
What's happening is I woke up skiing this morning, man.
Skiing?
Yeah, skiing. You know what that is?
No.
Oh man, it's a tummy
Did you say
ache.
skeeting or
no,
skiing?
Skiing.
Oh.
It's like check this out. You're sitting on the toilet, right? And you got your elbows on your knees, right? And you're still kind of sleeping, and you got your head propped up with your hands. It's called skiing.
Oh.
Man, I woke up with a stomach ache all day today, man. All day this morning.
So you were in the bathroom all morning?
All morning, man.
Yeah.
I don't know what it was last night.
Did it come out both ends or just one?
No, just one.
Oh, okay.
It was all good. It was all good. Slurpee time.
Slurpee time. All right, let's go back into news and events. Implementing TRID has obviously not been easy for lenders. TRID is the new regulations we came out with on October 3rd.
What's that stand for?
Tiller RESPA Integrated Disclosure. And what this is it allows, really the big thing is there's a loan estimate, but it allows consumers now 3 days before they go to consummation to get a loan. Now, and when you look at it, has it been costly for lenders? And what they're telling us, or some of this news, is that it has cost lenders $209 on average per loan on these new integrated or the TRID loans now, and it's really increasing cost to consumers. Now, I look at it
so
as,
that cost is getting passed to consumers? Is
well,
that what
no. So here's you kind of took that out of my mouth here, is where I think that consumers are already paying a high premium for a loan, right?
Yeah.
So they already got costs that they're like, well, I don't even know what I'm paying. What is an owner's policy and a lender's policy?
We just made it up.
Let's just write it in, right? So anyways, they think that there's a lot of cost already, and now they're saying that lenders are now passing that cost to consumers. And I don't know why you would do that, because it's already as hard as it is now with funds and everything. I mean, let's talk about this. You got a lot of down payment assistance programs out there, correct?
Correct.
So yes, I understand that it's not as cost effect. It doesn't affect the consumer, if you want to call it that way, as much as it has in the past. Because if you do get this down payment assistance program, well, guess what? You're only a little to no money out of pocket.
Yeah.
But at the same time, if it's still costs that you didn't want to consume from your end, why would you pass it to the consumer?
Yeah.
My goal and my work in Nova Home Loans, their job is to close loans.
Yeah.
So what I do and what we do is, as far as a lending institution, we try to make it as easy as possible, because we're trying to close a volume of business, including we want to get repeat business. You don't want to charge clients more money than they have to be charged.
So you're not charging clients. Is that what you're saying?
Exactly. Well, I don't think a lot of them are, but I know that there's a ton
that will pass it on.
Yeah, and it's usually the smaller entity type, loan lenders out there, because they're trying to make a per quota each loan. They're trying to make as much as they can.
Talking about that, Trid, I know when it first came up, I know that you had a little bit a speed bump there of getting everything in, but I can tell you now, everything has been really streamlined with Nova Home Loans. I'm getting CDs and docs at title 14 days advance. Come on, Chuck, how come we're not closing? Well, hey, man, there's a time frame. We got to wait, man.
Hey, VIP, listen.
I'm pretty impressed, dude.
I'm going to tell you something, right? All right, so everybody has to go through the process, right? Well, I'll tell you, it's about how you recover.
Yeah.
It's about how you make changes.
Yes.
And as your business grows as a loan officer and as Nova Home Loans, you have to accommodate that with other or new employees or adding people on your staff that's going to make it efficient.
Yeah.
Well, I can tell you that we're hitting record numbers here this upcoming month in April. And I think a lot of it is because of this system we put in place with the team and everybody that I have. And I'm just telling you right now, overall, my goal is to help you as a consumer, not to extend more cost to you.
Yes, because you will pay that per diem.
I'm trying to give lender credits. Anybody that wants to come to me, I'm trying to give them a lender credit, so that way it makes it easier for them to get into a home.
I like that, lender credit. What is lender credit?
Well, it's a rebate off of your rate. A lot of companies out there that are banks, they'll hold on to that money. You'll never even know about it. You'll be a consumer. I'll be like, wait a second. I talked to Dan, and he's giving me, $1,500 back. What are you going to give me? We don't do that here. I'm like, what? So the bottom line is this. A lot of banking institutions don't want to disclose that because it's kind of a bonus or some type of money that they don't have to give away. We do because, like I said, we're closing volume of business. I'm trying to help you with getting a loan.
But it's case-by-case basis and also the amount too, right?
But let's ask this question. What loans typically will get that lender credit? FHA and VA loans. Conventional, you're a little bit, kind of my hands are tied a little bit on this one. But conventional loans still, but it's just not as a big commodity.
So if you can get the down payment, I can negotiate the closing costs. You get some lender credit back for the home inspection and appraisal. If moons and stars line up,
Moons and stars,
if they line up, you can get into a home with less than no money down, basically.
Well, I know we got, 3 moons?
Yeah, that's right. 2 stars.
So anyways, let's talk about, speaking of TRID, appraisers are always will have many questions as they continue traveling down the road to compliance. Some of those rules have changed since October when the TILA RESPA integrated disclosure, which we talked about, took in effect. So mistakes by the appraiser regarding the report could result in a hyper diligence, meaning that their time to fix problems that maybe they put on the appraisal is only 24 to 48 hours, and they're under a higher scrutiny, really, and they're governed a little bit tighter now with these appraisals because they really don't want to mess up with these TRID guidelines and the time frames. You mess up, not only does that appraiser get affected, but the lender will get affected too, because now we don't have an appraisal where we can go into underwriting.
Yeah.
So now it's delaying everybody. So they're under higher scrutiny as well. I mean, everybody across the board is getting affected by this new TRID regulation.
What's the average turnaround time right now for an appraisal?
Well, for us, it's an appraisal management company we have in-house. It's about 3 to 5 day window.
Oh, that's not that bad.
But most companies, it's 7 to 10 because they don't have an appraisal management company. So it's a big thing. Also, rents continued to rise in March. Average rent prices increased in March by 0.4% from February by 2.7% year over year.
Yeah, that's really big. Remember, the average for a 2-bedroom right now for a new building, it's $1,200 a month. And at $1,200 a month, you can actually buy a house. And that's what we're going through right now with the gentleman that's out of state. He's thinking about getting a VA loan. He's not sure if he wants to rent a home or actually buy a home. So we're kind of going through that dilemma right now.
Yeah, and I'll tell you right now, when you look at it, it's not so much here in Las Vegas that rents are going up. I mean, I think there's a lot of people working here in Las Vegas that do need rent, but I also think there's a lot of smart consumers out there that are looking to purchase a home, especially when you have low interest rates right now and you also have these down payment assistance programs that's here.
Well, let's talk about that. We have a client that we just closed. He walked into my office, and at that point, this gentleman, he's a young entrepreneur.
Uh-huh.
And he wanted to buy a fourplex cash. He wanted to get into the investment deal. I said, hey, man, let's put the brakes on this. You buy this property, you're only going to make an 8% return. Let me show you the power of leverage based upon today's current interest rate.
I thought you were going to say the power of the dark side. I was like, what the?
This gentleman, this kid, he went in, he bought this property. He went in at FHA at 3.5% down, right? He's making $2,200 a month. His mortgage right now is a little bit less than $1,300. And check this out. Cash out of pocket, total of $9,000.
$9,000.
$9,000. Cash out of pocket. This kid is making extra $10,800 a year. Return on his investment at that point is infinity. But
infinity.
What that means is
it's an 8 sideways.
That's huge.
Check this out. Because this is an FHA loan, he has to live in one of the units, so he's really only netting $300 a month.
Wow.
But that's $3,600 a year. And the return on investment on his money is 40%. And that's the power of leverage. In 3 years, he'll get his money back. Then his return is infinity. He has no skin in the game.
Let me say one thing about this.
That's
this is
amazing.
not just for investors, though. This is for anybody.
Yeah.
The idea is if you go out and you want to get a return on any investment, could be your primary residence. If you make that decision, you said rents, right? Rents are continuing to rise in March. The median price for a 2-bedroom apartment last month was $1,300, while 1-bedroom was $1,150. I don't know if that's cost effective because you could buy a really nice home for, $1,150. Like that's a pretty nice home.
Yeah.
It's not a great home, but it's a pretty nice home.
Well, it really depends where you want to be, how many bedrooms, how many bathrooms. You may be bought out of the market, then it may be better to go rent.
Yeah, I mean, it's a big deal. I think that renters here are starting to get wise as far as maybe not always looking at the idea of renting, even if they're staying here for a year, because money's cheap.
Yeah.
I mean, if you're getting extended an offer where you could get into a house with no money down, okay, you just have to pay for closing costs.
Well, again, that's what I'm saying. This kid right here, in 3 years, he's got his money back. It doesn't matter what happens from there.
Right.
That's a hell of a return.
Well, that is a heck of a return. I'm going to say this, too, is that if you are a renter, and let's say you do make that plunge and say, I'm going to buy a home, there's a lot of incentive behind, becoming a homeowner. Not saying everybody has to. That's not the goal here. But I can tell you, but I'm going to tell you. I mean, it's a little bit better on if I'm going to put money towards anything, like we've talked about numerous times, money's cheap. It's funny because I have consumers. I've got a loan that I'm doing a person I'm getting a loan with right now.
Yeah.
They know that there's so much opportunity right now for buying a home. They don't want to. It's going to cost them, I think, like $2,500 to get a loan closed.
That's it?
That's it. Right?
$2,500?
And in some cases, it's nothing because we get all closing costs, but half of that's going to closing costs.
Yeah.
And he's still like, well, why do I got to pay the $2,500? And I'm like, do you know how much I had to put into this? Do
you want it for free?
Yeah, I mean, let's
give you money to buy the home.
I mean, that's the thing is the government and the Fed is trying to give you opportunity.
Yeah.
you got to have a little bit of skin in the game, even if it's that much. That's nothing, really. I mean, that's not even so. Just to have that much money and to invest it into something like that, you got to suck it up and don't come to me and be like, you really got to tell me I got to put $2,000 into this. I'm like,
it's so much of an entitlement.
You're buying a home. You're not buying a car. You're buying a home.
Other countries, you're putting down 40%.
It's amazing to me.
Oh man.
Also, student loans are now a problem, and they're getting back to this. Basically, what they're saying is that if we've talked about you going and working at Jack in the Box as a employee,
Crack in the Box,
yeah, and you have a 4-year degree, so I'm going to go to college and then I'm going to jump out and I'm going to flip burgers. Okay, well, you do that for a period of time, and you report this to the Fed of your earnings. They're going to give or relieve some of that debt that you owe on your student loans.
Yep,
and I think that's a problem. First, why would you go and get a loan and go and work at McDonald's or, Jack in the Box? I don't know, wherever the heck you work, but working at these low entry-level positions, and then you have to turn around and say, I can't afford to pay my loan back. And you got to look at that and say, well, who's going to pay for that? Well, it's going to be taxpayers.
That's correct.
Because they're just going to say it's a loss, and they're going to push it under the rug, and they're going to collect more taxes from us. So at the end of the day, go get a job that you need to get that you really went to school for, like go get a job that you went for a craft.
Damn, are we getting the Uncle Dan speech here? He said, go get a job.
Oh, good for you. All right, let's go over to housing news. What do you got for me today, Chad?
Housing news?
I want to hear some good stuff.
Oh, my gosh.
In the middle of our street.
Oh, yeah. Single-family residents. Single-family residents. We actually closed 728 properties last week.
Oh, yeah.
The average closings that we've been having a week since the past year is about 400 average a week.
Average.
So we've increased about almost 25% in sales.
Wow.
The median price right now is at $225,000.
Wow, that hasn't changed in 4 weeks.
No, it actually has. So if we take a look at the statistics from beginning of 2015 to the ending of 2015, we know that we jumped up 10%. So for this first quarter, we jumped up 2.2%. So we're actually on track to additional 10% this year. So that's actually good news. So the average price point right now is at $123 a square foot, with the average days on the market dropped down to 28 days.
28 days.
28 days, believe it or not.
Let me say something about that.
Yeah.
Now, it was at 60 days at one point. I'm sure not everybody's going to remember that, but imagine 60 days.
Yeah.
You as a seller having that. One, I think you've obviously overpriced your home. 60 days is a pretty long time, right? But 30 days, now we're talking 28 days is pretty good, right? So
no, that's real good.
Yeah.
If you're a seller, that's where you want to be.
Yeah.
Now's the time to unload. Believe it or not, I mean, we're picking up anywhere from 5 to 7 listings a month. Sellers are coming out of the woodwork and putting their properties on the market.
So I'm looking at multiple offers again. We're looking at less of inventory, and now you're getting into the market for whatever reason. I don't know what the reason is, but I know that people now are not getting the seller closing costs like they wanted to in a lot of cases. And it's back to it's a seller's market.
It is.
So explain to me what's going on with that.
Now, here's the thing. Also, what I've realized in the marketplace is a lot of rehab and flippers are coming into the marketplace at this price point, and they're actually listing their properties for a little bit more than the appraisal. And what they're doing is they're working with a smaller mortgage company, and what they're doing is pushing the buyer to say, hey, you don't have to use this company, but if you use this company, we will give you incentives to get the deal done.
What are those incentives that you've been hearing about?
Well, those incentives, they'll pay a little bit closing costs, or they'll get the lender credit back. And what they have is their own appraisal. So I don't know how they do it, but some of these deals, I don't know how they get it appraised, but they get it pushed.
Wow.
So what happens is, a lot of consumers, they'll work with their lenders and they're dedicated. But once they find a home that they really love, then they'll actually end up skipping this lender just to get that home.
They're going to skip lenders.
That's right.
Oh, when they start skipping me, we're going to have problems. They can't be skipping over me.
That's why you better lock them up somehow.
Oh, we're going to lock everybody up. That's what I do.
Single-family residents, we actually
throw away the key.
Single-family residents today, we have a total of 7,168 properties currently available. So that's good news for the consumers out there. As far as for inventory, we have about a 5 to 6 month supply. So 2015, 2016, it's going to mirror the same thing.
Okay.
That's what I'm seeing. Short sales is 9% of the market, 3% are actually bank-owned properties, and 88% are private sales. Now, let's actually take a look at the financing consideration. We know that 99% will accept cash. Conventional today is at 97% of all the properties that are on the market. 62% is FHA, 61% VA, and 1.2% is owner will carry.
Let me say this. If you're out there and you're a VA buyer, we always talk about this. Is it still problems where they're getting offers accepted? I know a lot of them have to go $5,000, $10,000 above purchase price sometimes to get closing costs because some of them do need it.
You're absolutely right, because 61% of the VA homes that are qualified out there, only 8.5% actually closes. We're down. That's not high at all. I mean, if you are a VA buyer, I don't even know why you're not taking advantage.
I got a lot of VA buyers going out right now, too.
Oh, do you really?
I'm telling you. And you know what? That lender credit comes in significantly for them. You know, we have a lot of I was talking to somebody yesterday. This guy calls me and he's like, you know what? What makes you different? I go, well, first off, my name's Dan French. I'm already different. But here's what he said. He goes, how can you give me a lender credit, or how can somebody come in and help me getting a VA loan when I've already been offered a good rate, and, you know, so on and so forth about what. So
it's more to that.
There's a lot more. You got to look at the residual income that's left over. You know, debt ratio, he has a high debt ratio, which I think we could still get it done. Doesn't matter because it's compensating factors when it comes to a VA loan. You know, and one of the things you got to look at is they do usually give the highest lender credit from my company. So you come to me, I have the best opportunity to maximize the amount of money I can give back to you for closing costs, including getting the best interest rates.
You know what I see?
Why not?
Consumers, once they get approved, they always just stick with that lender. They never get a lending estimate to see. Let's mirror match. Let's see, compare apples to apples, what the fees are. Not only that, what's important is, number one, do you actually really have good lines of communication with that lender? And also, what's the time frame and what their successful rate of closing is? All that plays a big deal because you got to work together as a team.
That is a good point. You know, that's probably one of the best points you put out there today.
You know what? I'm hot today. I'm out of here. I'm out.
I'm going to tell you something about that. So if you're out there and you're a person that's got a loan estimate or got a quote from a lending institution, I'm here to give you another loan estimate. Give me a call outside studio. I'd like to sit down and talk with you, see if I could beat their loan estimate and maybe beat their rate. You know why? Because in a lot of cases, if you shop your loan or you look at another direction for a lender, you might be looking at lower cost in your overall amount that you need to come in to pay the lender. You need to also look at the fact that what is the loan officer margin, because you might be able to get a lower interest rate. That is important. So you might want to take a look at that loan estimate and compare apples to apples and say, you know what? Dan is going to give me about $600 less in closing costs. Can you match that? And guess what? You hold your lender's feet to the fire. That's what I'm here for.
If we take a look at the average closing from last week, like I said, there was only, for single-family residents, 712 properties. If we take a look, let's take a look at the type of financing closing ratio. Cash, only 18% of closings were only cash.
Remember when it was in the 70% range?
I know. So check this out.
16%.
Conventional is at 40%. FHA is at 33%. So if you're an FHA buyer, you're working with a good agent like myself. You know what I'm saying? Like myself.
Yeah. Top tier.
Top tier.
Okay.
Top 1%, like always.
Yeah, right.
So that means if you're an FHA buyer today, you have the chance to beat out a cash buyer, because at the end of the day, cash don't mean nothing.
Oh, it does.
Why?
Cash is king.
Oh, is it really?
Yeah, but I'd still like to give you a loan.
And here's the reason why. Because at the end of the day, the seller only cares for one thing only, is when the dust settles, how much money am I going to make off this deal?
That's it. And you know what? And you know what? A lot of these sellers are still, like we talked about, putting their properties out there, hoping they're going to get a high return. And I still think in this case, you got more buyers still trying to put in multiple offers, and they're still waiting to see, well, I just want to get 5,000 more. Maybe I can get 10,000 more, you know, and they're just going to stay there. And until they see that there's no offers being put, I'm not saying we're in that market yet because it's only 28 days on the market, but this is a start, because what typically happens is when you start to get multiple offers, well, guess what? Now you got 5, 6, 7. Somebody in there is going to give that higher amount. And if we keep raising the average median price home and the purchasing power of these buyers keeps dwindling, we might have some issues here.
Well, check this out. If we look at today, there are 130 new listings that just came on the market today. Now, decrease on pricing is 54 properties. Now, what that tells you is that Just today alone, 54 people realizes that, hey, my home is overpriced. I got to drop the price.
That's a lot.
And that is a lot.
That is a lot.
Believe it or not. Let's move on to townhomes. Townhomes. Last week, 71 closings. For a medium 3 bedrooms, 1,400 square feet. The list price is at $160,000. The average sale right now is $158,000 at $108 per square foot. Guess how many days on the market? We went from 44 days down to 16 days.
For townhomes?
For townhomes.
Oh, okay.
What that means is a lot of buyers pushing out from single-family residents.
That's right.
From the median price point. They got to settle for the next thing. What's the best next thing? Townhomes.
Just next best. And you know what? It's the easiest thing. Next best, easiest thing for me to get financing, because condos still having litigation issues on a lot of areas. FHA, VA, 95% of them will not approve for financing. So guess what? Townhomes are looking sexy right now.
Now, condos, let's move on to condos. 96 condos actually closed last week. Let's take a look for the median for 2 bedrooms, 1,000 square feet, listed at $90,000. The average sales right now is at $86,000 at $92 a square foot. Average days on the market, 34 days.
Wow.
People are really pushing towards the townhomes versus the condos in today's market, because I think you get more bang for your buck.
Right.
Also, on the resale value, your demographic is going to be more broad because of the financing consideration. So keep that in mind.
Speaking of demographics, let's talk about Vegas a little bit. So our demographic buyers right now, you know, I know that you have a demographic for everything. The average listener to this show is 35 to 55, something like that.
That is correct.
What do you think the average buyer right now is at, as far as where does the age start at, you know, like demographic wise? Do you think we're now waiting longer to get into homes?
You know what? Who's really coming out of the woodworks is a lot of retirees.
Yes.
I have a lot of clients that are, you know, retiring, and we know that in today's society, in today's market, 19,000 baby boomers are retiring every single day, and majority of my clients are those baby boomers. They're actually coming out here, buying a home, paying cash, and they're going to sit on it.
I think also you have to look at, when you talk about millennials, they're staying at home with mom and dad.
Yeah.
They're not just jumping out in the workforce. They're not jumping out on their own. You know, you have an average person now that's a millennial living in with their parents. A lot of them, 27, 28 years old, are really just getting started.
But I noticed about the millennials, what they're doing is they're partnering up, friends or family, and they're buying a home together.
Yeah.
And that's what they're doing.
No, I told you need 3 or 4 people to do that anyways. So you need to already work on that right now. This is Dan French with the Market Snapshot. We have a lot of show left. We're going to talk about interest rate trending. We're going to talk about the consumer confidence in home buying here in March. Has that gone up? We'll be right back.
Get the latest financing and real estate news anytime you like. Just log on to danfrenchloans.com.
Oh, sure, I can do that.
Don't you dare go away. More with Dan and Company coming right up here on the Market Snapshot.
The new home of Sean Hannity in Las Vegas. News Talk 720, KDWN, a Beasley Media Group station.
Radio News. I'm Ed Donahue. This morning in Chester, Pennsylvania, outside Philadelphia, an Amtrak train hit a backhoe that was on the tracks and derailed.
I felt like the train hit something, and there were like 3 or 4 really big bangs, and it kind of threw us off the chairs.
No serious injuries were reported on the train.
We know there were at least 2 fatalities. The backhoe operator and his supervisor, both Amtrak employees.
New York Senator Charles Schumer says he spoke to Amtrak officials. He says it's unclear whether the backhoe was performing regular maintenance, which is usually scheduled on a Sunday morning because there are fewer trains on the tracks, or whether it was clearing debris from high winds in the Philadelphia area overnight. In Portland, Oregon overnight, World Cup soccer champion Abby Wambach was arrested for investigation of driving under the influence. Police say she was stopped after reportedly running a red light and failed a field sobriety and a breath test. Wambach recently announced her retirement. On her Facebook page, Abby Wambach wrote, "This was all on her, and she will make sure her horrible mistake is never repeated." Republican presidential candidate Donald Trump is predicting great success in the Wisconsin primary Tuesday. Trump also says John Kasich should get out of the race. He's won just one primary.
When you're 1 for 28, well, other people were doing much better than Kasich, and they left the race because they knew they couldn't win.
Donald Trump says John Kasich is taking his votes. Meantime, South Carolina Senator Lindsey Graham says people in the Middle East should not be too alarmed at the prospect of Donald Trump becoming president of the United States.
Don't let the politics of the moment make you believe that America has fundamentally changed in terms of the way we view the world. It hasn't.
Graham is in Cairo, and he says Trump has stirred controversy in the Middle East over a blanket ban on Muslim immigration in the U.S. This is AP Radio News. Tupac Shakur's stepfather is up for parole this week.
65-year-old Mutulu Shakur was once on the FBI's most wanted list. He was convicted of leading a revolutionary group known as the Family that was responsible for a trail of bloodshed, including the slayings of 2 New York police officers during a Brinks robbery. Now, after serving half a 60-year prison sentence, Shakur might soon be a free man because he's eligible for mandatory parole, something that's outraged victims' relatives. Shakur maintains his innocence. I'm Julie Walker.
For the second weekend in a row, Batman vs. Superman, Dawn of Justice is the #1 movie at the box office.
Bruce Wayne meets Clark Kent. I love it. I love bringing people together.
There was a steep drop-off in ticket sales this weekend, but it was still good enough for Batman vs. Superman to get the top spot. Disney's Zootopia held on to second place. I'm Ed Donahue, AP Radio News.
And we hope you're enjoying this beautiful Sunday. We thank you for tuning in to KDWN. The forecast for today, clear skies remaining. Also temps in the middle 80s. That's where we should top out this afternoon. Looks like that similar weather will continue for the next couple of days, and then a possible April shower rolling into the valley by Friday. Currently sunshine and 78, and stick around. More of the Market Snapshot on its way next here on News Talk 720 KDWN.
If your checking account is causing you headaches, come to One Nevada. With 46,000 free ATMs, merchant rewards, innovative mobile banking apps, and cash back every month, we're the cure for the common checking account. Apply online today or find a local branch at onenevada.org.
One Nevada Credit Union. Our one focus is you.
One Nevada is open to all Clark County residents. Federally insured by the NCUA, Equal Opportunity Lender.
Strategies and Solutions, your bottom line. With Johnny Dean, host of Bucket Strategy Investing.
You know, debt can be both an opportunity and a burden. Going into hock for a home or an education is usually a sound investment, and it also brings tax benefits. But what about the other kinds of debt? Buying a car, for instance, for most people means borrowing. But that debt usually carries high interest rates, and because a car is a depreciating asset, the loan balance eventually may exceed the value of the car. And some debt is very expensive and brings few benefits. Maybe you routinely add extra dollars to your car, student loan, or mortgage payments. That's a noble aim, but it may not be the most effective use of your money. Here's a suggestion. Prioritize when paying down debt. Calculate which loans carry the highest interest rates and fewest tax benefits, and pay down those first. Who wouldn't like to get out from under his or her mortgage? Still, it makes little sense to eliminate your mortgage if you carry a large car loan with higher interest rates, or worse yet, carry a balance on your high interest rate credit card.
For more strategies and solutions, watch Bucket Strategy Investing online at wealthed.com.
Are you a badass? Then get ready. The Badass Dash is back. The ultimate obstacle course and adventure race will be held on Saturday, May 28th at Sam Boyd Stadium with a new course that's bigger and more badass than ever. Register now. Badasses come in all shapes and sizes. Elite level, kids, teams, even canines. Register today at badassdash.com or check the link on this station's website. Run with Vegas's biggest badasses at the ultimate adventure race. The Badass Dash, Saturday, May 28th at Sam Boyd Stadium. Sponsored by Ted Wien's Complete Auto Service.
Purchasing your first home or refinancing your current home are both major financial decisions that necessitate having the right person on your side. Hi, I'm Dan French with Nova Home Loans, and I'll put my 9 years experience to work for you to make the loan process as easy as possible. Call me today, Dan French, at 702-216-3907.
And for real estate and home financing news you can use, catch the Market Snapshot every Sunday from 11 a.m. till 1 p.m. on News Talk 720 KDWN.
NMLS number 369115. Broker number 0902429.
You're listening to the Market Snapshot with Dan French from Nova Home Loans.
And welcome back to the Market Snapshot. It's Dan French from Nova Home Loans, your go-to mortgage specialist here in the LV, Las Vegas, right, Veg? Right?
Did you say babe?
Yeah.
What?
Yeah,
You
right.
ain't my babe. I'm the man. I'm the man.
Hey, baby. Hey, baby. What's going on over there, Chakits?
Nothing, just rolling in like a champ, like I always do.
Yeah? You doing push-ups in the hallway again?
No.
Doing the Rocky theme?
No. I'm skiing. I had to go skiing.
Let's go over interest rate trending, and I want to tell everybody I don't think the mortgage interest rates are going to raise at all this year. I think there's a lot of speculation. There's not good news in the economy, consistent signs of weakness. And, you know, with Janet Yellen coming out and saying that we might possibly do this in June, we're going to have a meeting in April. I don't still think there's going to be enough economic data that supports this. Because you know what, Chuck, if they were going to do that, they would have already done it.
Hey, check this out. I mean, with all this negative media and press, but the Dow Jones is still above around 1,800.
Well, let's talk about this. We have signs of recession right now, and everybody out there is painting a picture. Well, I'm not going to say everybody, but we're going to say, a lot of the Fed is painting a picture that we're in a great economy. Yeah, you know what? So our economy here in Vegas is doing pretty well, and we've talked about that. It doesn't show signs of unemployment not increasing too much here. But did you know one thing about this state? That this state is majority owned. I believe it's owned by the Fed. Did you know that?
Isn't that like all the states?
No, it's not. I mean, majority of it's owned by the Fed. And I tell you, it's not a bad thing to have that because, look, maybe it's showing that the Fed is obviously putting attention here, making sure that Vegas is thriving. I don't know. But maybe the census that comes out with the jobs report and things like that, I'm going to talk about this because it's going to show the direction of what interest rates actually ended up at.
Yeah.
Okay, so let's talk about application news. Mortgage applications in the United States fell 1% last week. It's not a huge lot of data on that, but it does show that following a 3.3% drop in the last 2 weeks on fixed mortgage rates on a fixed 30-year loan. And applications to purchase a home actually rose 2.1%. Refinances are going down. Why are refinances going down? Well, anytime you have rates that are high or higher or going up, that's going to show to the consumer that that's the direction it's going to go.
Yeah.
That's going to drop off. You know, we had a lot of those, I call them scragglers, that did not take advantage of refinancing their rate a year ago.
Wow, you just slapped them in the face.
Well, they didn't. And they came back and they're like, hey, it's back again. Can I do it now? So a lot of them that didn't do it, they did it. Refinance applications are down right now. So mortgage applications averaged about 0.54% from 2007. And let me say something about this. We reached an all-time high of 49.10% in January of 2015 and a record low 38.8% in January of 2009. What does that say? Well, it says rates are not rates, but mortgage applications are going up for purchases, which is good.
Yeah.
It's a very gradual thing. But we have seen a drop-off a little bit in how many people are coming to extend credit. Obviously, refinances played a huge role in some of those mortgage applications that were being taken, but they're starting to go away too. Rates are going up. We lost about, in the month of March, I think we lost close to about 1/4 point. So you got to realize that, pricing and things do affect refinances.
Now, out of that refinancing, do you know the numbers or the statistics of how much people are actually pulling money out of their home?
No, I don't know that, but a lot of them are pulling, somewhere in ranges of 50 to 60,000. Yeah, because they're doing home improvement. That increase in equity has shown.
We're seeing back signs of 2006 then. They're pulling their money out using it as an ATM machine?
No, I mean, a lot of them, listen, it's not as much. And not only that, we haven't peaked as much as we did back then as far as home prices. So on average, no, a lot of them took advantage of the rate. Money's cheap, so they're refinancing their rate. But when you look at equity, there's some in there or people out there that are still pulling out equity because you know what? A lot of their money was put into this home, or let's say they started it 4 or 5 years ago. Well, we had huge increases at one point.
Or they probably bought it at cash at $90,000. Now it's worth $200,000, and at that point, it may be feasible to pull all your money back out and just refinance.
Absolutely, stocks are lower on feeling the U.S. economic resilience despite global woes. Could allow the Fed that gradually raise rates again this year. I don't think so.
Yeah.
Current Fed fund features show a June rate hike of about 30%. That doesn't give me confidence. How is 30% even something that would even we speak about? This is up from 24%. So great. We had consumer confidence because we have non-farm payroll and also unemployment was a little bit, or the jobs was a little bit better than expected. So now they're saying, 6% higher increase for us to raise rates in June. That's not going to happen. The economy's not doing well. We think this will be a tough time for the Fed to raise rates because really there's more negative news than there's positive news.
Yeah.
You know, within the report, the unemployment rate rose to 5% from 4.9%. That's not good news. The U6 number was 9.8% from 9.7%. That's not good news. The labor participation rate rose 63% for the first time in 2 years. All I'm telling you is this. Where this market is heading, I'm not seeing signs that show strength. I'm seeing or hearing a lot of cover up on the economy doing better than expected when it's not doing that well. It's just not. I mean,
well, here's the thing.
GDP is lower than expected. You know, you got the core CPI, which has already hit its number. Unemployment has hit its number. We've had all these things that were put in place to put checkpoints on when we're going to raise interest rates. They haven't done it. They're not going to do it. If they were going to do it,
and this is based upon data dependent, and that's what they're going off of, and they still haven't raised rates.
Well, that's what we should be, is data dependent.
Yeah,
we shouldn't be consumer confident dependent or confidence dependent on raising rates. We should look at data and numbers that indicate really what's going on. Now, consumer confidence, we're going to talk about that in a little bit, but that does play a huge role also on how the market is trending. And it could play a role in how interest rates are trending. So mortgage bonds finished the week higher, which pushed downward pressure on rates. Rates were higher Monday, but started to turn the other direction Tuesday with mixed data and some of the Fed comments, which we talked about. Personal income rose 0.2% versus the expected 0.1%. Consumer confidence, we just talked about this, at 96.2, stronger than expected at 94.5. Why, though? Because out there you're hearing all these good things about the economy doing well. It is doing well in some cases in spots. Most of all, though, overall, it's not doing that well. You know, you look at all these things that we talked about, they're not seeing numbers like they were expecting to see. And it's just like we've talked about, quantitative easing and all this control that the Fed is doing, it's doing nothing but delaying the inevitable. Most economies recover if they do it naturally instead of trying to do it artificially. And we're not doing it the right way, Chuck. What do you think?
Enough said.
Weekly jobless claims were 276 versus the 265. Like we talked about, the unemployment rate did rise. So if you're saying that it's not affecting us, why is unemployment going up? You got to look at that. So what does this mean? Mortgage rates finished the week better by about a half of a discount point. Now, yes, it's gotten better. Okay, so we recovered some of the cost that we lost or some of the pricing we lost in March. But still, rates are not going to get increased. They're not going to go up. They're not going to increase to the point where, you know, they did it in 2015 where the Fed slipped that in. The first quarter showed some of the worst signs, like we've talked about, on the economy that we've seen in the last 5, maybe even longer years. And it's all this is because of a result of them slipping in that quarter of a point of interest rate hike that they did at the end of the year. And now we're showing signs that there's no way they can do this again. Well, our economy it'll fall.
I mean, here's the thing. It sounds like it's all negative stuff, okay? But what's really going on here in Vegas? Because obviously it's not affecting us right now. And we're thriving.
Well, you know what? It's just like everything else, though. Everything else outside is affected. And then at some point, it will affect us.
Yes.
You know, you got to realize there's a lot of goods and services that's shipped into Vegas.
Correct.
A lot of people with businesses and things run businesses here that maybe also run them in other areas. You know, so that might affect their business overall production. It's going to affect us here at some point.
Yes, but that's when we're actually really running into a recession, and then it would trickle down here.
There's signs right now we're going towards that direction.
Man, we have to, you know, sell Vegas. Vegas is the number one hot spot.
I'm going to tell you what it is in the reality because I want people to really get the understanding of really what's going on. Is it doing well? Yes. But is it doing well artificially? Absolutely. Yes. And that's why. It's not doing well just because consumers are out there spending money. They just did a survey that said more spenders and consumers are saving money. They're not spending their money. They're putting it in their bank, then they just keep it there.
Well, I can tell you, Vegas right now is thriving. If we take a look at February's for the tourists that actually came in, according to the Visitor Authority, we are actually up 5.3%. And actually 3.8% from year to date. So people are still coming in. They're still spending money. So here's the thing. This is the leading indicator for Las Vegas. So before you look at job growth and things, GDP around Las Vegas, you have to start off with the people visiting Las Vegas.
Let's ask this question. Do you think that there's a QE4 coming?
Of course. We already know that.
Right. So why?
Why? Because they owe so much money, and at the end of the day, the banks and the feds control us.
So at the end of the day, they cannot raise rates because if they do, inflation will go up.
Correct.
And we'll have even bigger problems.
Well, inflation is going to go up regardless because as soon as they print more money for QE4, what's going to happen is everything cost is going to go around. If you don't even know this, if you walk into your local supermarket, things are higher. Costs have gone up. Just because gas is low and you're thinking, hey, everything's great, that don't mean.
That's just one thing, though. Oil is just one thing. It doesn't mean across, like, that's a good example of deflation, really, right? Because in that area, obviously,
that's not a good thing. You have to understand that oil is one of the commodities that we use, and if oil and gas prices go down, what happens is people are like, oh, yeah, the economy is good. But you have to understand, all those people that work for those companies
are being laid off.
Who's getting hurt? Texas, North Dakota. Now, if these people are getting laid off, they can't afford houses. Did you know North Dakota, when they started drilling, it was one of the places that grew like 43% within months. The housing market just took off. But what's happening now?
Well, I could say this, too. If you look at the overall picture of what rates are doing and why the Fed keeps putting out there that they're going to raise rates, well, I think they're
just talking smack.
Well, they have to because they've been bringing it up. And honestly, we probably need to raise rates, but we can't. That's the problem. We can't. We've got so much debt and there's so much money printed.
Over $19 trillion now.
There's no way now that they can say, well, we're going to slowly let this market. They just have to let the market recover.
Yeah.
If they don't, listen, and then we talked about gold, right? You were talking about this on one time. So gold was always being predicted that when this whole thing goes on, it's going to drop. Well, gold actually went up. The cost of gold. Right?
Just a year ago, we were at 1,100. Now we're above 1,250.
So these things are important because looking at this indicates exactly not only that gold is important. Why, Chuck?
Because it holds a wealth. And that's
tangible asset.
Exactly. That's actually real money. What you have in your pocket is actually currency. It's a form of trade. That's not real money. It's just the form of trade.
So when they print that currency, because you can't print or you can't redistribute a tangible asset.
Well,
unless you just go get more of it and then put it away.
So it's like you have $100,000 in the world, you print another $100,000, and there's only 2 cows. Then that's how things go up in cost. I don't know. I just threw that out there.
Where did cows come from?
Back into like 1782.
You gonna milk those cows?
Well, I mean, that's how inflation is occurred, because what happens is the more money you print, you're de-evaluating that currency, then you have more money in the population, and people are willing to pay more for those items.
Well, I think it's always a problem that they're trying to keep that even keel.
Yeah.
You can't deflate and you can't increase. Inflation and deflation has to be really put in check, because if you deflate, what happens? You have less opportunity. You're going to get laid off on your job. Your spending power. Now buyers or consumers or people that own buildings and businesses, they have to drop the cost of their product to meet the means of people that are no longer working and don't have any income to purchase this. So guess what? Everything drops, prices drop, and deflation happens. That's the same as importance as far as inflation.
Also, the other leading indicator is demographics. Okay, in the U.S., we have about 366 million people. About 37% are actually baby boomers and are about to retire. Now, remember, during that time period, a lot of people were building and all this stuff. The generation after it, do they have enough generations to actually buy the supply and demands that we currently have? And these are the issues that we will run into in the near future. Mark my words.
When they fall off?
That
is
is
what you're
correct.
Saying? I got you.
Because the average person that lives, their life expectancy right now is about 85 years old.
85?
85. That's actually really good.
How long are you going to live till?
About 92.
Oh, okay. You
but now,
got the number.
Yeah. But now check this out. You have to understand, 40 years ago, a family would actually have a family of 5. In today's economy, in today's day and age, we only have a family of 2.
Right.
The reason why is because of inflation. Things cost more money. People are more reserved. They're not buying and spending more things. They're not having more babies.
Well, let me say, everybody's talking about the economy's doing well. Where's the consumer confidence? Let's talk about consumer confidence here for a second. Do you know what consumer confidence is? It's measured by the Consumer Confidence Index, the CCI, is defining the degree of optimism on the state of the economy that consumers like you and me and Chuck, are expressing their activities of saving and spending money.
This goes back to the analogy that you were talking about. You're hanging out in your backyard, barbecuing. Hey, man, everything's going good, blah, blah, blah. Right?
You had a barbecue?
Sorry.
I didn't know you were barbecuing. Anyways, consumer confidence is really about, it's the way you perceive the economy. You could have 3 good things and then 1 negative. Well, if that person says, you know what, the economy's doing bad because they heard that 1 negative thing, well, that person's, conceives it as, hey, it's not a good economy to go out and extend credit, go purchase things with the money that you have. So I think it's a big part of that. And I think a lot of this stuff that's going on is really the Obama administration, the Fed, and everybody else putting out there that this is doing well. The economy's doing great, but it's really not. And they're just trying to promote consumer confidence. And I think that's the biggest thing that's going on here, including what we're going to talk about. Consumer confidence when home buyers think it's consumer confidence right now that it's the best time to buy a home. You know what? In some cases, it is.
Well, here's the thing. What I noticed, too, is, when the market goes up and the consumer confidence is there, everybody's like, now's the time to buy. I already have to hurry up and jump into the market before it gets too high.
I heard that 3 years ago. You want to know why? I said, rates are low. Prices are low. Buy now, right?
Buy now.
Everybody was wanting to buy, And you know what? 3 years later now, prices are now higher, which, now you got to really look at it. But the rates have stayed the same, really.
But believe that. Last year, beginning of last year, you would have paid $200,000 for a home. Because you waited 12 months, now you're paying $225,000.
And that's not a huge difference, but now you're paying
12.2%.
Well, listen, everybody's timing's not the same as everybody else's. So you got to put that in perspective, right?
But here's the thing. If you're thinking about buying a home and you're sitting off the sidelines because you think your credit is bad, fix those issues now.
Well, and that's what I'm thinking is you got a credit services that's free over at Nova Home Loans.
Yeah.
I have people that are seriously, one person yesterday, I am at a 607. I need you at a 620. Go and pay your credit card down from $1,500 to $600.
So you coached them.
So it was not even a coach. It was just, here, do this and we can approve you. I'm not sitting over here like, okay, check.
Yeah.
It's like, hey, buddy, go pay your credit card down.
And we got you.
And we got you a loan. Okay. How hard is that? All I'm saying is it's not easy like that for everybody. But even if you're somebody out there that's going to be 8 to 12 months out, put us to the test.
At least you know where you stand.
Let's get that game plan going. Yeah. Let's get in here and see where we can help you at. Because at the end of the day, even if you have answers and then you are the one that's responsible for not making this happen, then you could blame yourself. Because then you could say, you know what, I got the information I needed. There's no reason why anybody should not buy a home. I'm going to talk about consumer confidence here in a second because, listen, we have low rates. We have consumer confidence obviously is through the roof because everybody's out there saying the economy is just thriving. Everybody's got money and everybody's doing, something and the everything's great. It's not. But here's the thing. You have a down payment assistance program. We have like 2 of them right now. We're talking about getting this WISH program. There's a lot of opportunity out there where you're little to no money out of pocket. The biggest thing with people that maybe we call them boomerang buyers, right?
Yep.
That had those.
What are those?
Significant credit impact, short sale, foreclosure,
couple
bankruptcy,
years ago.
Anything. You come back in this market, okay? You're little to no money out of pocket, and guess what? Your risk involved is really almost nothing. I got a guy the other day that's telling me I have to put $2,000 in a loan. Is there any way we can get around this? I'm sitting here going, you know what? $2,000 is really nothing for you to get into a purchase at home.
Sir, how's about I give you $2,000 to buy the home? How does that sound?
What are you doing? You trying to be a straw buyer over here? You can't do that.
Just kidding.
Jesus, Chuck. You got to put that away. Put that in your pocket.
Put away my silver and my gold.
No, just like anyways, consumer confidence is really important, but it's also you got to follow it with the data, right? Data dependent. And it's data information that you need to follow to make the educated decision that you need to make. I think as anybody out there, and we're going to talk about this a little bit more, you have to have the timing's got to be right. You got to have the right information. And also you have to look at the idea that is it going to be cost effective for me to have a mortgage than it is going to be to rent? Or is it going to be something that you might just turn away from? I don't know why you would turn away from buying a home when you got money that's been given to you. Yeah. But why would you do that? Right? Why would you not at least take a look at the idea? I'd rather live in a 3-bedroom, 2-bath home in Las Vegas that's a pretty decent location than try to, cramp up in a 1-bedroom or 2-bedroom apartment and still pay the same payment. That doesn't make any sense to me, especially if you got a family. Hey,
Correct.
I just want to stay renting because you know what? I have 3 kids, but I'm going to put 3 of them in one room, and then me and my husband are going to be in the other room. You know, like
Correct.
why? Why would you do that?
But you have to understand that as far as for demographics, you know, a person gets married around the age of 23, and they'll actually move in and start the family by the age of 28. Then they'll actually move out of the apartment as well.
Demographics, let me say something. Demographics doesn't have it doesn't hold anything towards, is it the right thing to do on a return on the investment?
I'm talking about
money?
As far as an overall picture.
Yeah, but you know what? Like I said, timing's got to be there.
Well,
but
it has to be.
The only time I would rent is because I have to, and I've told you this before. If I'm 22 years old and I can qualify for a home and I'm putting a down payment, even if I'm going to sell that house and I don't even know if I'm going to be there for a period of time.
What happens if you decide to move because you get a job transfer and you can't make that mortgage payment? Then what?
Well,
because the rents don't justify the mortgage.
In certain situations, you can get around that. Now, most often, people typically sign a year lease, right? How do you get out of the lease? You got to break it and you got to pay money.
But here's the thing. Even though that you break a lease, worst case scenario, if you break the lease, that's fine. But at the end of the day, you can't break a mortgage.
Well, you can sell the mortgage, though. And that's what I'm trying
only
to say.
if you can. That's only if you can.
Everybody has the ability to sell a mortgage in this market right now. This market is leveled out. It's stagnant, but there's not showing. In a lot of locations, there might be a small decrease.
The only way it's going to work, Dan, is if we increase 10% this year, because you have to understand that if you're going to sell a property for $200,000, you got to pay commissions. That's $12,000. So technically, the market has to increase at least by 12%.
Let's ask this question: what's the percentage of people out there that are really going to transfer a job like that though and get into a loan?
I don't know, but
probably less than 5%.
But what I'm just trying to explain to you, we're basing it upon 1 year of rent. So that's what we're talking about.
I'm basing it off of just an educated decision. Is it right or wrong to purchase a home in a market like this where money's cheap?
All I'm saying is if you're going to purchase a home versus renting, okay, one of the signs that you have to take a look at is my mortgage payment going to be lower than the rent status around the area? Then I would say go ahead and pull the trigger.
How often does that happen, though? Quite a bit.
It just depends on the certain location. And also what happens is when people start buying homes, they get emotionally involved. They're not dependent based upon the data
let's say
of what's
this,
going on.
you don't buy, and let's say the purchase price is existing homes $225 right now, and it goes to $230, $235. Now you lost $10,000. Let's say rates go up just a smidge, right? Now you lost pricing on your monthly payment.
But we already know rates ain't going to go up. Now you're making that up.
Let's say it does happen. All right, let's say that happens.
You know that's not going to happen.
No, but listen. But then now, that's a year later, now you're thinking about, well, should I buy a home? You know, rates have gone up a bit. Now the pricing, existing home prices, and the new homes have gone up. Should I buy? And here's what you got to look at. Well, rent is probably going to go up too. So if I stay renting, I'm losing money on my rent as well, including I'm losing the fact that when I go file my taxes, my tax incentive on the interest that I have paid for that previous year cannot be written off because I don't have a mortgage. I don't own a loan. I don't have a loan. I'm not saying everybody needs to go get a loan, but if I have that opportunity, I'm going to strongly consider.
So the question here is, let me ask you this. If you moved here and you're thinking about moving in a year, are you going to rent or are you going to buy?
I'm going to buy.
Man,
absolutely.
I'm about to sock you.
I'm going to buy.
Come on.
You know why?
Why?
Because you know what? Who knows what after a year happens, right? If I say I think I'm going to move in a year, at least I have that decision that I've already bought. My rent payment or my mortgage payment is going to stay the same.
Yeah.
So let's say if I said after 12 months, I might stay here for another year or two. Well, now I'm not in that position where I might have to pay more money for my home if I decide to buy, or now I'm just forced to rent and my money is still going to nothing.
You're not forced to rent because at the end of the day, you can always leave.
Stan French with the Market Snapshot. We'll be right back. Be right back here with Chakits Krulsawat. And we got a whole lot of show left. We'll be right back.
Ready for even more content?
Yes, thank you.
Check out past shows online at danfrenchloans.com.
Yeah, now you're talking.
Stick around. The Market Snapshot continues next here on News Talk 720 KDWN.
AP Update, I'm Ed Donahue. The candidates for president are focusing on Wisconsin in Tuesday's primary. For the Democrats, Hillary Clinton said she feels sorry for young Bernie Sanders supporters who believe unreliable information spread by his campaign about support she's received from fossil fuel interests. Sanders responded on ABC's This Week.
I think the secretary is getting very nervous that poll after poll shows us doing much better against Trump than she is.
For the Republicans, Donald Trump thinks even without Wisconsin, he can get enough delegates to become the Republican presidential nominee.
It would always be better to win. I think I get there anyway.
Trump is confident he will win in Wisconsin. He was on Fox News Sunday. Donald Trump also thinks John Kasich should get out of the GOP race, arguing the Ohio governor, who's only won his home state so far, shouldn't be allowed to continue accumulating delegates if he has no chance of being the nominee. AP Update. I'm Ed Donahue.
And a quick peek at the forecast for the rest of your Sunday. Clear skies, warm sunshine. We should top out somewhere in the middle 80s. Got a similar forecast temperature-wise for most of this upcoming week with a possible April shower by Friday. Currently sunny and 78. Stick around. The content continues with more of the Market Snapshot next here on News Talk 720 KDWN.
Purchasing your first home or refinancing your current home are both major financial decisions that necessitate having the right person on your side. Hi, I'm Dan French with Nova Home Loans, and I'll put my 9 years experience to work for you to make the loan process as easy as possible. Call me today, Dan French, at 702-216-3907.
And for real estate and home financing news you can use, catch the Market Snapshot every Sunday from 11 a.m. till 1 p.m. on News Talk 720 KDWN.
Your news, traffic, and weather from AM 720 KDWN is now available on iHeartRadio.
Download the free iHeartRadio app from your app store to hear KDWN on your smartphone or tablet.
Are you a badass? Then get ready. The Badass Dash is back. The ultimate obstacle course and adventure race will be held on Saturday, May 28th at Sam Boyd Stadium with a new course that's bigger and more badass than ever. Register now. Badasses come in all shapes and sizes. Elite level, kids, teams, even canines. Register today at badassdash.com or check the link on this station's website. Run with Vegas's biggest badasses at the ultimate adventure race. The Badass Dash, Saturday, May 28th at Sam Boyd Stadium. Sponsored by Ted Wien's Complete Auto Service.
Save the date, Wednesday, April 27th for the Denim Day Fashion Show and Luncheon at the Fashion Show Las Vegas, benefiting the Rape Crisis Center. Denim Day gives everyone a chance to raise awareness and stand with survivors to assure them that they are not alone. It's also a chance to support the Rape Crisis Center's services and programs that reach tens of thousands of individuals in the community each year. Wednesday, April 27th at Fashion Show Las Vegas, it's Denim Day Fashion Show. For more information, go to rcclv.org.
You're listening to the Market Snapshot with Dan French from Nova Home Loans.
Welcome back to the Market Snapshot. It is Dan French from Nova Home Loans, your go-to mortgage specialist here in Nevada, Las Vegas, home of the 51s. Right, Chuck?
That's right. Did you go watch that game the other day?
I went and watched the game the other day. It was the Chicago. Well, I didn't go. I was. So it's a long story. So I
didn't go.
I was en route.
Yeah.
Right, and then I got to the
to the light.
No, to the light. And I turned back around. No, I got to the stadium. This is funny.
Yeah.
So I'm driving around and the lots were full, and I was frustrated.
It was that busy.
Well, it was pretty packed, right?
Really?
So I drove there and I was looking around and I'm like, man, there's no spots. So the only spot was I had to park, pretty far out. It was already probably the third inning. So the third inning they have like where they take out their starters.
Yeah.
And because this was not a regular season game, so it was a preseason game. And so I got there and I was like, you know what? I'm out. I just rolled home and I was like,
Hey,
I'm such a party pooper.
Hey, you know
I was
what?
like,
At least you made it.
Hey, I waved to everybody.
Yeah.
I don't know if they've seen it, but I waved to them. Everybody's telling me they got a beer waiting for me. And I said, you know what? I'm not going to be there.
But you're a red wine drinker, aren't you?
Well, sometimes. I mean, most of the time, 95% of the time. Every once in a while, I'll live on the dark side and go get a beer.
Oh, okay.
Yeah, and I'll just sit there and drink that, I don't know. I like the...
What are you drinking, like Marlowe or something?
Oh, no, definitely the Michelob Ultras. Has the lowest calories.
I was talking about wine, bro.
Oh, wine?
Yeah, I was talking about wine.
Of course, it's the Cabernet.
Cabernet?
Yeah.
Man, that's big dollars, huh?
Oh, you got to get the finest.
The finest.
Yeah, you take a hit of that and you're just like, woo. Yeah, like, oh, man.
I actually brew my own wine. I should make you some.
You brew your own wine?
Yeah. I got one right now in my refrigerator.
You do that in Hawaii?
No, it actually says Nova Home Loans Dan French. still sit in the refrigerator.
All right. Let's go back to what we've been talking about, the survey rise in homeowner confidence. Now, homeowners look at the idea that, is it a good time to buy here in Vegas? I think other areas it's maybe not, and I get that. So let's look at this. A recent survey, 1,000 potential home buyers ahead of the spring real estate season showed that they are finding that there's an increase in consumer confidence in purchasing a home. They were suggesting that they're becoming more self-reliant with home buyer experience.
Mm-hmm.
And with this weak economic data, how could this be? Like how does somebody say, you know what? The gross domestic product's down. The CPI, core CPI is down. You have all these things that's showing that, yes, we've hit numbers that the Fed was supposed to raise rates, which they didn't. The Fed really came out and said, we're raising rates when we find that the economy's actually recovered.
Well, yeah.
Why haven't they?
Mm-hmm.
And where does the confidence come from then? Well, it comes from what really it's a local thing, but really
what people talk about.
Well, it's not what people talk about. Plus, it's also what's being pushed down your throat. I mean, which is the economy is doing well,
mm-hmm.
and it's better right now to buy a home. No other time to buy right now. Rates, I don't know. I mean, think about this. They were supposed to raise rates how many years ago, or talk about it?
Yeah.
They had quantitative easing 1, 2, 3. They had all this stuff that's going on, artificially keeping the rates low. And you're telling me over a 4 or 5 year span right now?
8 years before they raise interest rates.
It's still not here. And the thing is it's not going to go away. So there's no sense of urgency for anybody. And obviously, if it's a good time to buy now and there's confidence now, in 6 months, they're going to be feeding the same thing that it's still a good time to buy a home.
You know what's crazy?
It's not going to go away.
I've noticed a lot of buyers are coming out of the woodworks now, and we've been more busy than we ever been.
Well, and why is there less inventory? Let's ask that question. Is there really not that much inventory out there right now in Las Vegas?
You know what? The inventory has been the same since last year. And I would say it's a stagnant market where it's leveled off, but things are selling fast and things are coming on the market fast.
Right.
That's the reason why we still have that, 5.5 month supply to 6 month supply of inventory.
Survey found 80% of home buyers are confident that the 2016 home buying environment will be as good or better than it was 5 years ago.
Mm-hmm.
Well, let's look at it. Is it really?
No, it's good when the price is low.
Right.
That's the best time to buy.
How does that make sense when the prices for a home is up?
Yeah.
Right? The rates are relatively the same, but now it's taking 2 or 3 people to buy a home versus just one. There's a lot less 40-hour-a-week jobs out there now. So now you need 3 or 4 jobs. So the average person out there trying to purchase a home is tired.
Well, that's where the confidence come in with the consumer, because they're like, I got to get a home now before it's too late.
So they said, yeah, we're up 215,000 jobs in March. Well, a lot of them are part-time. Great. You know what? That doesn't help the average consumer on a daily average or a monthly average of how much they spend.
No. And part-time out here is $8.50 an hour average for minimum wage. I mean, how much home can you actually buy at $8.25?
Well, a lot of them are hospitality and they have tips.
Yeah.
Right? So as we talked about, if you're somebody out there that's
43%, I want to say.
Really?
Yes, 43%.
If you're out there and you're not reporting your tips and you're out there trying to purchase a home, chances are you need to report as much income as you can, because you're probably not doing that on your W-2 form, which is going to really support most of it, or your last ending pay stub, or the taxes. If you're not reporting this stuff, Vegas is big with tips. They're big with hospitality.
Yeah.
How much do they have for that?
I don't know. You tell me.
I don't know either, but I do know that I get a lot of people that come into my office and they can't really support the mortgage, because now the mortgage is higher and they're only reporting so much of their income through their tips.
No, I got you.
And that's not just for tipped employees. It's really for anybody out there that's not reporting all of their income at all.
Yeah.
You're a self-employment person. You got a business you're running. If you're not reporting all your income, we're only going to be able to use
for so much. Yeah.
I mean, so you really got to pay attention to this. Is the economy 5 years, better than it was 5 years ago?
Yes, I would say yes.
I would say yes, but is it better for the consumer, and is the confidence there to buy a home more now? I would say no. I would say it's about the same as it was, because there's nothing really that's changed too much other than a volatility of interest rates, signs that the economy, the Fed comes out and says the economy is doing better with consumer confidence, which it's not, and then home prices have gone up. So what's really gotten better? What's really put more confidence?
The artificial market.
It's exactly right.
What it is.
That's exactly right. And we've talked about that. So it's great to have consumer confidence, but it's also, let's look at that.
Yeah. Well, let's take a look at this. Like you said, it really just depends. Is it really worth it for you to buy? And that's why you really have to run the numbers to see if it actually makes sense. And it really depends on you and your family and the situation and the time of your life, because it may not make sense. But here's the thing. For me, it makes sense as far as leveraging out my money, borrowing cheap money to go buy more properties, and making a return on my investment. But if you're just some guy that's, thinking about buying versus renting, you may want to consider renting, because if you're not going to be planning on staying here for, 1 or 2 years, you may be running into some issues in the near future.
Yeah, and here's the thing you got to look at as a consumer. Now, when you're investing money like this, a lot of them are.
Yeah.
But you're still getting in a position where maybe 5 years ago we didn't have these home is possible, home at last, and all these down payment assistance. Nobody wanted to extend credit. Everybody was scared.
Yeah.
Banks were shutting their doors. Nobody had all this opportunity that they have now. So maybe the confidence comes from the fact that there's opportunity that's being presented.
And there's not that much money to put down.
And there's not much money to put down.
So basically the risk is very minimized, where you can walk into the deal, and if something happens, you could just walk away with a few $1,000s.
Absolutely, and that's the thing is that I'm
not saying doing it. Don't do it. But I'm just saying.
Well, I would say look at the idea.
Yeah.
I mean,
look at the idea.
Here's why. I mean, before, let's say you had only $5,000.
Yeah.
Right. Well, that's going to exhaust your account.
Yeah.
Now you're walking into a home. It's taking all you got. You're a little bit scared. You don't know if you're going to have enough for closing costs and everything. Well, let me say this. One is if you can negotiate the seller closing costs. Like I said, little to no money out of pocket. I got somebody getting into a house for $2,000. Honestly, that doesn't happen all the time. But it does happen enough where I can say, you know what? You have a strong opportunity to get some of those closing costs paid, if not all. And if you're not looking at the idea of purchasing a home with these programs that's going on right now, I don't know what you're doing. I really don't. I don't. I think you
sitting on the sidelines, watching the game.
You're obviously just on in another. You're in left field. And it's like I'm over here trying to pitch to you and say, look, here's some opportunity. Here's this. Here's this. There's this. There's this. If you're not going to take advantage of it and you're just going to kind of look the other direction, you know what? That's your decision. But at the same time, you have to buy something or you have to pay rent. You should probably consider at least looking at the idea with no risk. That consumer confidence that's going on, I don't think it's the consumer confidence. I think it's the opportunities that's presented themselves. Consumer confidence, if you look at it as a whole, is really just all hearsay. It's all words.
Yeah.
Hey, Chuck, the economy's doing well. What do you think about that? Oh, it's doing well? Okay.
Oh, let's go buy.
Yeah.
Let's go buy.
Oh, it is? Okay. How did you know that? Oh.
Somebody told me.
Somebody told me. Well, show me the data. Well, now we present the data and Chuck's going, no, it's not. That's not.
Let me give you a prime example. The other day, there was a house that was just listed at, $385,000. We had to drop and accept the price at $365,000, and the daughter was a little bit upset and saying, "Hey, Chuck, why did you, accept the offer at this price point?" And I had to explain to her that, hey, the property's not going to appraise, and if we don't do this, we're not going to get our offer accepted. And she was getting feedback from a bunch of people saying that, hey, how come you didn't sell it for more? How come you didn't sell it for more? Well, here's the data. This is what's selling. And that's why we provide this content and this information on this show, to really make you a better home shopper. And not only that, it's really to help you when the time comes to sell your property.
Absolutely. And you know what? The idea is we look at it as a consumer's eyes. I do.
Yeah.
And I know you do too, but I'm saying that because I want to experience what you're going through.
Yeah.
Because you know what? That's going to make me a better lender and a loan officer to help you. Because if I know what your obstacles are, then I can kind of help those obstacles become easier for you.
And it's like a game plan, and that's why it's very important to get with the right agent and get with the right lender, and also with the client being on the same page with all three. It makes the deal and the transaction a lot simpler to get the deal done.
Yeah, and I'm going to say one thing about this. We're out there not to say you have to go buy a home, so please don't take that in consideration. What I'm saying, though, is I think it's a very good opportunity, and I think you should strongly consider it.
Yeah.
Depending on where you're at. Now, obviously, if you're somebody that is just getting started in life and things like that, maybe you're just not ready for it.
Yeah.
Mentally, you have to have a good, idea that this is a huge responsibility, right?
A couple brass balls.
Right. I mean, you might have to have exactly. So you might have to have a nice set to
some
make
guavas.
to make that decision. But at the end,
coconuts.
Yeah, you got to have some coconuts hanging out there.
Yeah.
But let me say this: if you take those coconuts and you plunge into getting a home, that could bring you wealth down the road.
That is
and
correct.
also, if you're not at that position, Well, maybe listening to this show will put you in a position down the road that says, you know what? I'm going to put a game plan together. I'm not ready today, but maybe in a year or two, I might be ready.
Yeah.
And I'm going to start that process now. Dan, how do I get started? I'm not saying I'm going to buy right now, but at the end of the day, that's where I'm going.
So it doesn't hurt to take a look where you stand.
Absolutely.
Is this all free? Everything, the credit and everything. And all
everything
that
I do is free. I actually had somebody call me the other day and they said, "How much do you charge to get an approval?"
Free $99.
I looked at him. What do you mean by that? Like, I don't know what that means. Like, are you saying like, you have to give me money because you're sitting with me, like a consultation? I was like, no. I said, we give free consultations, right?
Free $99. We take gold and silver.
Let me say this.
Yeah.
These consultations and things, it's so, I just say sit down with me because everybody likes to use that consultation verbiage.
Yeah.
Well, let me say something.
Let's just talk.
Let's talk. Let's be person to person here.
Yeah.
I'm just like you.
Yeah.
I do loans. That's it. I'm the same as you. I go have a beer at places just like you. I go watch a movie. I don't need to sit with you and say, let's go have a 30-minute consultation and sit down and talk about your goals are important to me.
Yeah.
And the thing about that is there's no cost to sit down and talk with me as a person. Why would you want that?
Mm-hmm.
You know, I don't think that's good business anyways. The other thing is that he's like, well, you know, a lot of these companies, they try to kind of bring you in and they tell you what you want to hear and then they flip it on you. I'm just going to tell you what's there because you know what? This guy sat here on the phone. He goes, well, I don't like to hear that. I go, well, sir, my job's not to tell you what you want to hear. It's to tell you what the truth is and what the reality is.
Yeah.
You could take it and leave it. I don't care. That's your deal.
Mm-hmm.
All right? I'm giving content. You make the decision. At the end of the day, I'm working with this guy. But people got to understand that lenders, lawyers, all these other people, yeah, they have this stature. They got this, you know, education behind them, but they're just like people like you and me.
Yes.
And they need to be looked at as a consumer. What is their goals? What is their opportunities to try to get into a home? And we're giving you everything we got.
And not all lenders may fit with you, and that's why I always say, let's get that lending estimate and let's screen those lenders to see if you're actually compatible with those lenders. That's a really big deal. Communication is the key.
I want to talk a little bit more about student loans. Okay,
let's get into it.
So student loans are a big thing right now. I see a lot of them out there. You have to hit them for a portion of that payment if it's not showing.
How much?
It's 2% usually is what they look at. So let's say you have a student loan that's $10,000, right?
Mm-hmm.
You're hitting them for a pretty big penny on a payment. That could justify you being approved for the dollar amount that you want versus not. Student loans to me are very, I'm not going to say they're lucrative, but you know, I do know that to get an education at certain schools, it costs a lot of money.
Yeah.
All I can tell you about this student loan thing that's going on is the fact that if a bank is going to provide a loan for that amount and then you're going to forgive a portion of it, why give that loan amount up to that loan amount as high as they do when at the end of the day, if there's a consumer that's getting out of college, they're not going to say, well, I don't have that opportunity to get my debt relieved, so I'm just going to go start a craft that I went to school for, the job that I went to school for, right? Why would you not at least exercise that I'm just going to stick out for a couple years and just show that my income's not high and then get that debt relieved?
Well, let me ask you this.
It makes no sense.
What's the average right now on a loan for a student loan right now?
I don't do student loans. I don't know. But I could tell you that I've seen all different ranges. You know, you got 10 of them sometimes on a credit report, 5,000, 3,000. It's all these different
odd numbers.
Yeah,
okay.
it's just because they just take a bunch of little loans and they put them all on one credit report.
Gotcha.
Right? And it's almost like they're getting them from different banks, but then they put it as a whole. I don't know how they're doing it.
So let me ask you this: can you even get finance if you got like 2 or 3 lates on a student loan?
Well, no. Listen, if it's caught up, yes, okay. But let's ask this question: most of these loans that are coming out, especially with these Home is Possible and all these other things, it's an FHA loan.
Yeah.
And what are these loans backed by when you talk about student loans? They're backed by the government, right? So guess what? You're also going to get a loan by a home that's backed by the government. They're not going to look light at that.
Yeah.
They're going to frown from trying to say, you know what?
Why would we even give this to you?
Why would we give you a loan when you can't even pay your student loan payments?
Yeah.
I just think that the reality is these student loans are starting to really show their ugliness here, and they're really coming out, and they're making a big impact not only on people that's trying to purchase a home, but just on people in life. You got payments now that you can't support because now you go into a job that's an entry-level position. You have all these loan and all this debt that's accumulated. Who approved you for this?
Well, think about this. This goes back to the demographics, the generation before the baby boomers. Now, if they're on this debt and they're taking advantage of the system, how are they going to be able to supply all the demand that's out there?
Well, and that's the thing is if you're willing to give a loan where you can't repay it, why are you giving the loan? That's like me saying, Chuck, I'm going to give you a loan for $60,000, and then you're going to say, you know what, Dan, I'm only making $10 an hour.
Because they're going to funnel it through the taxpayer. That's how they're going to get the money back.
So guess what? You, me, everybody else is going to be paying for this tax debt, and it's all from banks. Banks are the ones that's extending these loans, and if you don't have the ability by screening these people to say, you know what, you have to go get a job that's going to be a part of your craft within a period of time, then we're going to call the note due.
Socialism.
And that's the problem, is that they're not looking at that, and banks are the ones making a profit because guess what? They get to write that off on their books, but they still get that loan.
And they get paid
and
right away.
And guess who's paying for that? Printing money. You, me, Chuck, everybody out there that's paying taxes have to pay that because they're printing money and they're extending loans. And guess what? Now we're paying the debt that these individuals can't pay. And you know what? That's a problem. I'm not saying not getting a student loan, but what I'm saying is if you're going to do this, make sure you understand there's a repercussion for everything that goes on out there.
And also the field that you're going to get into, it's going to pay you back that money in 10 folds.
Well, why would you not go to your purpose of going to school is not to get out and start at, some golf shop and you're a cashier at a golf store.
Yeah.
You're going to school so you can become a certain profession or craft to enter the workforce, right?
Correct.
Where is that at? Why do they not have that opportunity? And I don't understand why they're not making that an opportunity. If I'm going to school for a craft, I'm going to my job and saying, even if I started an entry-level position for that job, chances are within a year or two, you're going to get a pay increase. Your job might be solidified. You might start to have the path of becoming and making more money to pay these loans back. And guess what? You working at a golf store or at a fast food joint, wherever you're working, that's not going to pay the bills. It's going to be good for that time period.
Yeah.
But if you're taking the initiative to get a loan and you're getting these loans, and people sometimes in these colleges are living off of those loans, they're paying their bills, paying all their insurance and all their food and everything that's going on. Well, you might want to look at the idea that if you're going to do that, you're now an adult. Be responsible. Try to pay your loan back, or don't get into the loan itself.
Uncle Dan. Tell it how it is, Uncle Dan.
Do we have a caller on line one? Or is this somebody that's just unknown? Producer?
Is he sleeping?
Oh, he's sleeping over there.
He's sleeping.
What's going on over here? Are you up? How you doing today, producer? You on? Oh, he looks like he's taking a nap back there.
I can't believe you're calling him out like that. You're calling him out.
Hey, producer, you there?
Oh, no. You have a call to take.
Oh, we have a caller. Okay.
Wow, that's weird. We're not even giving out numbers anymore.
I thought somebody had to go over there and put some water on his face or something. Kind of pat him out. How you doing today, sir? It's Dan French, the Market Snapshot. How are you?
Hey, guys, it's LG here, man, with a little promised inside Hollywood for you.
Who's this?
Les Grossman. Loving your show, as always.
Lex Luthor.
Yeah, that guy, too, on the bad day.
Hey,
on the
Lex,
dark
I got a
side.
question for you. When you wake up in the mornings, the first thing you do is go put on a cape?
There you go. And if you want to know why, you got to ask Tom Cruise.
Who's Tom Cruise?
Man, I got to educate you boys every time I know.
Well, let me tell you something, man. I'll tell you right now.
Yeah.
I know John Travolta, right? That's a guy that's somebody known. Probably Brad Pitt.
Okay.
But I don't know anything about this Tom Cruise guy.
He's about to educate you.
Tropic Thunder.
Was that rated R or was that X?
No, that's I'm going to go with Stiller, and that's the one where yours truly, being portrayed by Tom Cruise, sends the boys over to Nam to film a movie, and they're dealing it with.
Hey Lex, we gotta let you roll, man, because we got somebody coming in. I got somebody that's going to come in right now, and they're taking over my spot. So thank you for listening to the show and calling in. We got to end the show here in about 2 minutes. All right. So anyways, we got a lot of good things going on for next week. We want you to stay tuned because there's going to be a lot of good information for where rates are headed. We're going to tell you what Janet Yellen and if they are really going to have a meeting here this month to find out if we're going to raise interest rates. It's probably not going to happen. 95% sure. Everybody's 4 times it's going to do it. Now it's 2. I think it's going to be like in 2018 where they're going to say.
I think they're just going to ensure the economy. That's what's going to take place here at this meeting.
Consumer confidence again, right? Here it comes again. That's where it's all about. You know, hey, it's great. But just to go back, people out there that have student loans, this is not something to tell you that you're doing anything wrong. You're doing everything right. But the thing is that once you sign up for something, there's repercussion to everything that goes on, and it affects everybody. And that's what I look at. How is this going to affect somebody if the banks or somebody is giving me money and then I'm not paying it back? Banks are making a profit. It's not you. It's unfortunate that you're put in this position, but at the same time, banks are making a profit. Taxpayers are paying for those deficiencies. And then guess what? Every time that somebody comes in with a student loan, now they're looked at a little bit more with more scrutiny because now you're looked at as saying, you know, if you have any lates or you have any of this, guess what? They're obviously coming out with things that's helping the student loan process.
And I don't even think that they were aware how much this actually affects the loan process now as far as getting a loan.
Well, it could actually kill the loan.
Yeah.
You know, if I have to hit you for a payment now that we didn't see, you know, let's say your spouse. Let's say you're a person that's married to a spouse and she's got student loans, and that's debt that she wasn't accumulating. It's on deferment, whatever it is. Well, community property state.
So basically, before you get married, you got to have a credit report.
I mean, here's the thing: you have a spouse, and let's say that spouse is in a position where they have $5,000 or $10,000 that's owed. I'm still hitting them and you for that payment, even if you're the only one getting the loan, because we're in a community property state. And I've had student loans negatively affect people where it's dropped their purchasing power by $30,000 to $40,000.
Does that apply to conventional loans as well?
It does not.
Okay.
Because you know what? Conventional doesn't really have a thing that comes out and says, we're going to honor the community property state. But for VA and FHA loans, could hurt them. So it's very important that you look at the student loan, what you're getting into, what's involved. Don't rely so much on the relief act that they've given out for this debt for the student loans and getting some of this just wiped away where debt, you know, somebody's paying for it.
Because it really hurts you at the end of the day.
It hurts everybody. It hurts the economy because the economy is now showing that it's a loss.
Yeah.
You know, banks are still profiting from it. So all I'm saying is if you're going to go for a craft, go for a craft and go do that when you're outside of your employment. That's why you went to school for.
Yeah.
So,
get paid tenfolds.
Absolutely. Anything else you got to say today?
Well, let's finish it off. What's free?
Well, free credit services. We have that at Nova Home Loans. We have a lot of good information from that if you want to get started. Even if you're somebody that's trying to get for a home as possible, 640 rating, we can get you there.
640, huh?
640. We can get you there. So there's a lot of good things that's going on there with Nova Home Loans. You know, we have let's say about 12 bank options right now. It's more than anybody in the.
That's great.
Yeah, it's a lot.
So basically, you can go to any bank then to see what they're qualified with.
All of our underwriters oversee all those banks,
great.
So it's in-house. Anyways, it's Dan French with the Market Snapshot. We're going to be back next week with a lot of good information. We're here to make you smarter home buyers and smarter home shoppers. Please tune in next week, 11 a.m. to 1 p.m. That's every Sunday. We'll talk to you then.
Get the latest financing and real estate news anytime you like. Just log on to danfrenchloans.com.
Oh, sure, I can do that.
Don't you dare go away. More with Dan and Company coming right up here on the Market Snapshot.
The new home of Sean Hannity in Las Vegas. News Talk 720, KDWN.